Welcome to Explain the Charts, where today we are conducting an in-depth analysis of Apple, ticker symbol Apple, on April 14, 2026. The market is currently digesting a whirlwind of news from the recent Apple Day 2 event, which focused heavily on the new M5 Mac family and high-end desktop displays. Early reports also indicate that iPhone 17 demand is tracking stronger than anticipated, providing a significant fundamental tailwind for the stock. However, it is not all smooth sailing, as we have seen recent reports of a foldable iPhone delay and ongoing patent battles in China creating some friction. Looking at the long-term daily chart, we can see that Apple has had a volatile journey over the past year. Back in December 2025, the stock reached a notable peak near $286 before entering a corrective phase. As we moved into 2026, the price action became increasingly choppy, specifically during the late March and early April period. The chart shows a significant dip in early April 2026, where the price plummeted toward the $245 range. Interestingly, this dip coincided with analyst concerns regarding the U.S. stock market's start to the new year and broader tech sector slips. Since hitting those lows, we have seen a steady recovery attempt as the market began pricing in the M5 hardware announcements. The daily candles currently show us pushing back toward the $260 psychological level. Volume has remained relatively consistent during this recovery, suggesting a balanced battle between bulls and bears. Now, let's zoom in on the specific range of candles from late March through mid-April to see the recent reversal more clearly. On March 31st, we saw a bullish engulfing style move where the stock jumped from a low of 247 to a close of 253.79. This was followed by several days of consolidation before a sharp, albeit brief, dip on April 7th, where the low touched 245.70. Notice how the buyers stepped in aggressively at that 245 level, which now serves as our primary short-term support zone. The recovery from that April 7th low has been impressive, with the stock closing higher in 4 out of the last 5 sessions. On April 8th, the price reclaimed the 258 level, which acted as a catalyst for the current momentum. The fundamental news about the MacBook Neo and iPhone 17 market share gains likely provided the fuel for this bounce. As of April 13th, the stock closed at 259.20, showing a minor pullback from the intraday high of 260.18. This area near 260 is proving to be a sticky resistance point as traders wait for more clarity on the Federal Reserve's next move. We can see that the range between 255 and 262 has become a high-traffic zone for transactions. If the bulls can successfully flip 260 into support, the path toward the 270 level becomes much clearer. A failure to hold the 256 level, however, could see us retesting the $250 mark very quickly. Traders should watch the volume spikes on these daily candles, as they often precede the next big directional move. The shocking news regarding China's market opening has also contributed to the steady rise we see in the most recent candles. Overall, the daily trend is showing signs of a potential trend reversal from the early year slump. Switching over to the 1-hour chart, we can analyze the intraday behavior and find more precise entry and exit points. Over the last few trading days, the hourly candles have been carving out a very clear ascending channel. We saw a peak in the 1-hour data on April 10th, where the price touched 262.19 before cooling off. This 262.19 level represents a significant local resistance that needs to be broken on high volume. Support on the hourly time frame is currently found around the 257.50 level, where we saw multiple bounces on April 13th. The VWP on the hourly chart has been trending slightly above the current price, indicating some short-term selling pressure. We also see a narrowing of the price range, which often suggests a breakout is imminent. The M5 Mac family news seems to have stabilized the price floor, preventing any deep sell-offs during the lunch hour sessions. If you are a short-term trader, watching the 259.50 level is key for confirming bullish intent. Any hourly close above 261 would likely trigger momentum algorithms to target the 265 zone. Conversely, an hourly close below 256.50 would be a bearish signal, suggesting a return to the 253 area. The number of transactions peaked on the morning of April 13th, showing high engagement as the price tested the 260 barrier. Notice the long lower shadows on the candles near 257, which represent buy the dip behavior from institutional players. This suggests that there is strong demand under the current market price, despite the broader tech sector's occasional dips. Short-term reversals have been frequent, so using tight stop losses around these hourly pivots is highly recommended. Let's get even more granular with the 15-minute chart to see the action leading up to our current time of 14:31 Universal Time Coordinated. The 15-minute data from today, April 13th and April 14th, shows a series of tight consolidations around the 259 level. Early in the session, we saw a spike to 259.43, followed by a slight drift downward as the market opened. There is a clear support shelf at 258.80 on this time frame, which has held firm through several tests. The volume on the 15-minute candles has been declining, which usually points to a calm before the storm scenario. We can correlate this to investors bracing for the Fed meeting mentioned in recent news headlines. Bullish traders are looking for a quick move back above the 260.50 mark to reestablish the uptrend. Bearish traders are likely eyeing a break of the 258.50 level to scalp a move down to 257. The transactions count on the 15-minute chart shows that most of the heavy lifting was done in the first hour of trading. We are seeing some minor price exhaustion as we approach the midday hump, which is typical for Apple. The relationship between the VWAP and the candle closes here shows that the price is currently fairly valued by the market. Any sudden news regarding the Siri AI overhaul or further China patent rulings could break this equilibrium instantly. Keep an eye on the 15-minute EMA if you are looking for trend-following entries. Currently, the trend is neutral to slightly bullish as we hold above the previous day's value area. This timeframe highlights that while the daily chart looks strong, the immediate term is in a wait-and-see mode. Returning to the daily view to recap, our analysis shows Apple is in a precarious but hopeful position. Key resistance levels to watch are 262, 270, and the old high of 286. On the downside, critical support levels are 257, 253, and the line in the sand at 245. For a bullish outlook, we want to see a weekly close above 265, which would signal that the M5 Mac news is fully powering the stock. A bearish outlook would be reinforced if the price drops below 245, likely triggered by further China complications or iPhone delays. In the short term, I expect the stock to trade sideways between 255 and 265 as it consolidates these recent gains. I would estimate a 60% probability of a bullish breakout toward 275 within the next month, provided the iPhone 17 demand remains steady. There is a 40% chance we see a retest of the 240s if the broader market experiences a correction. The M5 family and the MacBook Neo represent the primary growth drivers for the remainder of 2026. Keep a close watch on the RSI and volume trends. A divergence here could signal a trap. Reasons to be bullish include the successful hardware event and the shocking China news surge. Reasons to be bearish include the foldable phone delay and the potential for a rally to fizzle as seen in the past. Long term, Apple remains a dominant player, but the technicals suggest we must respect the current resistance levels. Do not chase the price if it gaps up. Wait for a retest of support to ensure a better risk-to-reward ratio. Thank you for watching Explain the Charts, and remember to subscribe for more in-depth data analysis. Finally, please note that this video is for educational and entertainment purposes only. This is not financial advice, and you should always perform your own thorough research before making investment decisions. Market conditions can change rapidly, so stay informed and trade responsibly.